Welcome back to Grand Lesson 3 on So You Want to Learn How to Trade. So, Lesson 1, you learn where to go, you know what to look at when the chart is in front of you, you know what price is at, and you know very basic reading. Lesson 2 was for you. What type of trader do you want to be? Position holder, swing trader, Forex, stocks? That's for you to answer. And then I just gave you a couple of guides and places on where you could go to help you with that journey. And you could still be practicing. That's fine. But for lesson 3, I'm going to help enhance your chart reading skills so that way you can understand when is a better time for you to place your position. Why is it that when you place your trade, it seems like it automatically went the other way and all of this? So we're going to go over price action, support and resistance levels, and getting a more deeper in tune look on what's going on. Let's get to it. All right, so we are on the Dow Jones, and we're going to start with proper support and resistance levels. So what is a support and resistance level? So what a support level is, look at the floor. The floor supports you by holding you up. So same with the market. When the market is going down and it bounces on a level, that means that is the support. What is resistance? Resistance will be the roof. So whenever you're trying to reach for higher heights and it seems like things are getting hard to get past those heights or get to that height, that's called resistance. So the roof is resistance. Same in here. So let's mark out some levels. All right, so we're going to go here and we're going to get our horizontal line. And how you gauge it is, let's see where this dropped, and our cross eye, we're going to put it about right here where this dropped. Boom. That's our level. So now let's pull out and we're going to look to the left. All right. That's actually pretty accurate. Now, why is this a support level? Boom. When it came to right here, let me help y'all some more. I'm going to make some arrows for y'all can see better. When it came to this area, what did it start to do? Boom, it bounced up. When it came around, it started to get a little hectic. Bounce. Came right here, what did it do? Bounce. And again, came right here a couple times, got close, pull up, got close, pull up. Kind of passed it back up, but then what did it do? Ultimately, it ended up doing what? Going back up. So we understand now that when the price tends to come around this level, there's some type of resistance going on around there. And so because it's bouncing up, that makes it support. But support can also be resistance. So let's see if there's any resistance. Okay, it's a little too crunched up, but yep, we got resistance on this level. You see? So this is a pretty important level to pay attention to. So now, what do we got? Came up, touched, it's wicking, it pulled back, and then eventually it just broke past it. And then boom, what happened again? It broke past it, touch, came down in the end. We got it right here too. Came a little past it, but ultimately ended up closing past, came back down. And then what did it do? Came up, came back to retest, touch, ended up going back up. So that is how you make your support and resistance levels. Now, of course, you would do it more and more and more and more. Like some people's charts will have a whole bunch. They'll just list all the levels And we could do that, but I'm not going to do all that. But we're going to look at one more chart, and we're going to go over that one, and we're going to redo it again. Let's look at Alibaba. Oh, look, it looks like I already made one for here. All right, cool. So here goes Alibaba. Now, boom. What do we got right here? Touch, touch, touched here, came back down. Touch, came back down. And then it came past it, retested, came back down. Touch, up. It's touching, it's not breaking past it, up. Touching, not breaking past it, up. You see? That's how you make your levels. And like I say, typically you can make levels consistently, so that way you can always see where it tends to have typical resistance in that area, and normally you will place your trades around that area. Now let's talk about price action. Price action is very important. You typically put those with support and resistance levels, trend lines, and even moving averages. All right, so here goes the price action sheet. Now, there are all kinds of price actions. I typically look for certain ones because I see those more commonly than all these other ones that they say that there's that they say that you should look for. And I'll show you the ones that if we come across them, I'll tell you the ones that I look for the most. And here goes one right here. Double bottom or tweezer bottoms. I'll look for this right here. I look for this one right here. I like to see this. And like I say, you normally look for that candle formation at the support and resistance level, or around your trend line when it touches, and then you want to see these typical movements. So same right here. Double top, a hammer. You see, those are the ones that I typically, there are more, but I don't see them on here. But these are ones that I typically look for the most. And then there are candle patterns. So you see pattern, double bottom, or W's and M's. When it goes one way, typically it also goes the other way for the opposite pattern. This is bullish going up. This is bearish going down. And then we also have triple bottoms and triple tops. Inverted head and shoulders, and then regular head and shoulders. Basically, it looks like a 3-point crown or a mountain, however you wish to look at it. And we have wedges, all of them. And this is all throughout charts. Like, you will see them everywhere. I'm going to go back to these charts and you will see, we're going to notice a few. So try to remember the easy ones, which is the W, the M, the head and shoulders. Remember those. Those are pretty easy. So this is how it looks as a line graph, but how it looks as an actual candlestick pattern, it'll look similar to this right here. Head and shoulders right here. Inverted head and shoulders right here. Double top or an M. Sometimes a double top does not necessarily have to have the M. It could just be a double top like this and it just goes straight down. Sometimes that happens too. And here are some wedges, descending triangle, ascending triangle, things like that. So things like this happen all the time. And this is how it looks as an individual candle. So here are more individual candle formations that you should look for at the resistance level. So you have hammers, inverted hammer, hanging man, still the same thing as a hammer. Shooting star, basically the same thing, just for the opposite side. So this is for when you're going long or buying or going bullish, going up, and then bearish, going down. So that I don't know why they name them different names. And I'm not saying all these silly names, but the ones that I look for, the hammer, I look for that. Dragonfly candle, I look for that. Engulfing candle, very important candle, I look for that. That's when an engulfing candle is when, let's just say it's going down and there's a whole bunch of red candles. And then once it hits, let's just say this is the level. Once it hits this, and then it comes over and the green candle is longer than that previous candle, like this one, how this red one is longer than this previous one. Engulfing candle. That one is one of my favorite ones. The three soldiers, it is a strong candle pattern, but by the time this formation has already formed, the market already moved. You might be late putting in your entry by then. So it is a strong pattern, but I typically don't go for it. Morning star, evening star. That's another one of my favorites. Basically, this is the same formation. This is just a doji candle right here. Favorite formations right here. I love these. I look for these all the time. And like I say, this is just a reverse version of it. I look for those all the time. Those are my favorite. So now let's go back and see if we can remember any of those formations that we saw along these lines. Let's go back to where we was at before, the Dow. Okay. Oh, look, I can already see one right here. And this isn't even at one of the levels that we marked, but we're going to mark another level. Boom. Here goes another level right here. You see how I just crunched it up? And like I said, levels are very easy to identify. They're very easy, especially when your eye gets more trained, because right now I'm marking major levels. There are also minor levels, like levels within them. So here go a minor level. Boom. There go another one right there. So you see how it'll typically get stuck in between this zone right here. Boom, 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 boom. You see, same right here. Just, it's stuck. It's stuck. It's bouncing in between them. You see what I'm saying? So that's also major and minor support and resistance levels. But right now I'm going for the major ones because it's for you guys to understand. And like I said, here goes another minor one right here. Boom. Very, very easy to spot. Eventually, when your eyes get trained, they'll be very easy to spot. Here goes another one. You see, when it gets in between here, it get a little choppy. It get a little choppy. So these are very important. So that way, when you're making your analysis and you're like, okay, I want to put a trade in right here because it ended up breaking past it. But because you didn't pay any attention to this level right here, look, you're going to be going through hell with this trade. And look, we're on the daily time frame. So that means all these candles represents 1 day worth of time. And you're going to be going through a choppy market of you positive, negative, positive, negative, positive, negative, positive, negative, positive, negative. Find the major levels like these right here. When it's at the bottom, that's why they say buy low, sell high. Because if you would sell high at this point, there ain't no choppiness. You see what I'm saying? You would have just went through a couple of days of it bouncing, but then went through a whole weeks, months of days of profit. Buy low, sell high. That's why understanding these support and resistance levels is very important. And then tying it alongside with price action. But like I say, we came back to understand price action. Remember I said M's and W's. Heads and shoulders are very important movements. And what we got right here, we got an M right here, double top, boom, 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 in a large time frame. So since it's in a large time frame, we know that this is gonna play out for a minute. It started from here, came all the way up, hit that middle point, all the way back up again. And now, typically, when that happens, the right side normally always matches with the left side. Where price was once at before, it's likely going to reach back at that point again. So like I said, the M formation started from here. And look, it reached it. So whenever you put your entry in right here, you have a great expectancy on where it is very likely to go when it has formations like this. But we still got to get a little bit closer because we also have to understand candlestick price actions. Remember what I talked about when I say morning stars, even stars, and hammers and all that? So check this out right here. Oh, goodness. Check this out right here. Came up, went a little past it, came back down, and then this came back down, but then it pulled up. But there's a long wick. When it wicks like that, you kind of want to wait because that means it's still indecisive. There's still indecision. And then we're still waiting, we're still waiting, we're still waiting. And then we got a price drop. Boom. And it locked down right here. Oh, it's going down. It's going down. Then it does what it does. Then it came back again. Now check this out. As it's going up, the candles are now starting to get small. So what I want you guys to understand about thick and small candles, how long this candle is. We are retail traders. So when I put my little money in, that ain't gonna make the market move like that. Banks and financial institutions, they're the ones with the money, and they're putting loads of money in there. When it comes down to the Forex market, trillions of dollars are being traded every day. And that trillion is not an exaggeration. It's literally trillions of dollars every day being put in the market. And same with stocks, billions of dollars. And when these banks and financial institutions are putting their money in, that's what causes it to pump up like that. And so banks was finally like, okay, yeah, we want this thing to go up. And then it caused that big movement. Same for this right here. So when this was going down, they was pulling money out and it was dropping. This is the Dow. So they was pulling money out, dropping. But then somebody decided to say, nah, I want this thing to go up. And so as it was dropping, it possibly hit something called a limit order. A limit order is something that you can place ahead of time. So it's like, let's just say the market is currently right here. You could put a limit order in and say, I want, if the market reaches right here, it'll open your order up and then fulfill it for you. So it's likely there's limit orders that was unfulfilled orders that was possibly right here. And when it touched it, it was millions upon billions of dollars. And it caused price to pull back up and then continue back on up. It's very likely that could happen. And then boom, we got price action right here. So they was putting money in, and then something happened to where it possibly started hitting unfulfilled orders that were right here that wants the market to go down. And then boom, look at this long candle. Look at that nice red engulfing candle. Remember that? Engulfing. We got that right here. It takes over all these candles right here. About half or a little more than half of this one. And we have it continuing on. That's a good sell. That's a good sell right there. Here goes the M. Let's try to find some more. Here goes a little small one right here. A little small M. Look a little ugly, but it is one. Uh-oh, look at that. We got a head and shoulders. Shoulder, head, shoulder. The shoulder matched with this right here. Ain't that what it said? Yup. Head and shoulders. That's what it looked like. Boom, 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 boom. Put your cell in right there or around right here. Well, actually, it would really be right here. So, because that's the confirmation. And then, boom. Look at all. And what I say before, the right side matches with the left side all the time. So this head and shoulders started from way down here. So you would have made all this money. Like I say, this is the day chart. So this is days worth of money that you're just getting. That's the power of reading a chart and knowing how to just make simple reads. So what do we learn today? Support and resistance levels. How to eyeball them. Price action. When to apply it. We apply it at the points of the support and resistance. Not just in parts like this where it's like, well, I seen a candle formation where it's technically you can put it there. Yes, you can. But a lot of times, let me tell you why you don't necessarily want to do that. So let's just say I put in around right here because it boom, boom, boom. And it's not technically a morning star, but let's just say it is because it kind of resembles it. And so now, boom, we put an entry in right here. Now we in the middle of hell. Because like I said, it's choppy. When it normally gets in between here, it gets choppy. So if we were to put in right here, we positive, negative, positive for a little while, negative, positive, negative. You see what I'm saying? It's too much going on. Put it in as high as you can. Look at the major levels. And then always have an expectancy on where you wish to put in at. So yeah, that's y'all's lesson for the day. Hope y'all enjoy that. See you